So I've been doing this for a long time, almost 20 years. What we're about to talk about can cause a tremendous amount of stress to the borrower if not handled properly. Hi, this is Joe Harris, and this is your Keeping Your Business on Track. I'm here with Nick Morgan. How's it going, Nick?
I'm doing well, Joe. How are you?
Good. So today's episode is geared for real estate agents who are looking to help their client navigate the mortgage process, because I'm sure they get a lot of questions from their clients. And this is for individuals who might be going through the mortgage process right now or looking to go through the mortgage process. And it's all about what I would say causes the client the most frustration in the mortgage process.
Yeah.
So I've been doing this for a long time, almost 20 years. And I can tell you what we're about to talk about can cause a tremendous amount of stress to the borrower if not handled properly.
For sure. And in my short stint in the operation department here, it was similar. It was one of the most frustrating parts of that documentation process. So I think it'll be helpful for anybody who's looking or currently in the process right now.
Yeah.
Yeah.
So we're talking about documenting assets.
Yes.
And more in what more specifically?
So more specifically, large deposits.
Large deposits.
Yeah. And if you could, for anybody who's unfamiliar, what exactly is a large deposit?
Okay. Well, I guess we'll start at the beginning. What is a large deposit? A large deposit is anything that's over 50% of your gross monthly income, right?
Yes.
Did I get that right? 50%?
Yeah,
of
total monthly qualifying income. So the income that we're...
So let's say you make, on paper for qualifying purposes for a mortgage, let's say you make $10,000 a month. Well, if there's a large deposit that we see that's over $5,000, we're going to ask for it to be sourced.
Correct. And so we're going to ask for, where's that money coming from? But why do we care? Why do lenders care?
Well, there's a couple of reasons we care. Number one, we have a responsibility under the FinCEN Banking Act. There's a banking act that says that we have a responsibility to we're the front line of defense, one of the front lines of defense to see if there's any nefarious activity. So if we see large unsourced deposits or without an explanation, we have a duty, if it's a certain amount, to actually report that through a certain channel.
Right.
And so that's one thing we have to do.
Okay.
Right. And so another reason is we want to make sure there's not something else going on in the transaction, like the sellers are giving the buyers money because that's not allowed, and some other things like that. So there's a real reason to make sure that we have to source those deposits.
Right. They could be coming from like an undocumented loan, an additional income source, all sorts of things like that, where that's information that we need to know because it might, make you less than qualifying, essentially.
Well, look at it this way. If it came from an illegal activity, right?
Yes.
Let's say it came from an illegal activity and the feds arrested said person and they bought the house with those funds. Well, guess what? The bank's collateral, the property is now in jeopardy. Yeah. So if the police take over the house, take the house, possess the house, then that's going to cause a problem to the collateral, to the lender. And if we had just known that, then we wouldn't have made that loan to allow them to buy it on illegal funds. So there's lots of reasons.
Yes.
Okay. So you have a bunch of these for Q&A for me to see how I do.
Yeah. So similarly to when we were verifying income and going through scenarios, I want to go through some scenarios with you for how you might have gotten your money and how you might be concerned, like, well, how am I going to document this for the lender?
Yes, documentation.
Yeah, I'm a little nervous about it, and I don't want them to think I'm shady or whatever. So I'm going to go through these. Hopefully we cover maybe a scenario that you are encountering, and if not, comment down below, and maybe we can help you out with that as well.
And a lot of times I just say, listen, if you got the money through legitimate means, there's going to be a legitimate way to source and document it. And it's better to know these things now. So if you encounter it or if you're at the time and these things happen, you keep the proper documentation.
For sure. So, yeah.
Right,
so without further ado, first one, the most simple is, let's say you have two bank accounts, all right, with two different banks, and we are seeing a large deposit in one of those bank accounts from your separate bank.
Okay, so let me just restate the question. You have two, the underwriter looks at the bank statement that we get from the borrower, and it shows money coming in, right? And it shows from another bank, a bank account. We would collect that other bank statement from the borrower. But here's the trick. If we get that and everything's cool and there's no large deposits into there, then that's the documentation we need. We can show that coming in. Now,
Yes.
if there's a large deposit in that bank account, we're going to have to source that.
Yeah.
And sometimes this causes frustration. But then, if it comes from another account, we'll collect that. So if we see a new one come in, we're going to collect the bank account, and then we're going to look at that bank statement. If there's large deposits going in there, we'll have to source those as well.
Right. And then you can go down a little rabbit hole. But essentially, you just need that separate account statement.
We need that as a separate account statement.
Yep. Cool. A very, very common one is that you're selling your old house, and the net proceeds from that house has obviously just entered your account. It's going to show up because you're likely buying a house shortly after.
So if they recently sold their house and they put a lot, like let's say they get $200,000 from the sale of their home, they put in their bank statement. We collect the bank statement, see a deposit for $200,000.
Yes.
We're going to be asking for the, if it's a mortgage transaction originally, we're going to ask for the final signed CD, right? Closing disclosure. If it's a cash transaction, typically you get a settlement statement. We're going to get those, and we're going to match up those numbers with what goes in. Now, if you split it, if you said, well, out of that $200,000, I want $100,000 to go into this bank, 50 in there, and 50 in there, and so we only see $100,000 going into that bank. We'd like to see, get the settlement or closing disclosure, as well as the checks that went in, or show those other accounts that it split that way. That way we can source all the funds.
Gotcha. Sweet. The next one I have is liquidation of your retirement account.
Okay. So typically I tell people not to, if you're going to liquidate, right, we're going to get, if it's already been liquidated, we'll get proof of liquidation. Okay. We'll get it, the money coming out of that. You said a retirement account or just a managed fund account or like a
retirement. Let's say retirement account.
Retirement account. Okay. So we'll get that account showing the money coming out, right? And we'll get proof of liquidation. Showing that it went into this account from here, and there we go. We'll typically get terms, of a liquidation,
right,
or terms of, what do they call it?
Terms of withdrawal.
Terms of withdrawal,
what they're called.
Terms of withdrawal. See, there's your underwriting skills coming in. So we'll get terms of withdrawal, and so sometimes when we ask for this condition, they haven't liquidated their funds yet. So we'll get a copy of the statement, terms of withdrawal, and in that it should say what they can and cannot do and take out and what they're going to hold back and things like that.
If there's any stipulations or anything that they have to meet before they can take out the money or whatever.
Correct.
Yeah.
But then they're going to have to withdraw that. And just as a side note, on retirement accounts, plan for it to take 10 days to get the money out, another 5 days for that money to clear.
Yeah.
Just that's as a rule of thumb.
Gotcha.
All right.
Awesome. The next one I have up is cold hard cash. Let's say you had like $10,000 in your safe and you're like, okay, I want to deposit this because I want to document it for whatever.
All right. Well, if you can prove where that money came from, like if you sold an asset, which we'll get into, and put that money in the safe, and you can make that proof, and we'll talk about the next one next. But but if you can prove that line of where it came from, then it becomes usable, right? But for the most part, if you've just been storing, squirreling away little bits of cash over time, or even big bits of cash, it doesn't matter how long that's been sitting in your mattress. There is no seasoning that happened when you had it under the mattress or in your safe. So typically, and I'm talking what's normal and typical for most lenders and banks and most guidelines. But on that one, normally you can't use mattress money.
Yeah.
Unless you can prove where it came from.
Right. Yeah. So if you've been storing it away for years and years, it's going to be hard.
So they would have to have that seasoned in a bank for at least 2 bank statements.
Yeah.
And I don't want to get into all the rules and regulations that people may or may not encounter when putting that money into a bank. They're going to have to figure that out on their own.
Gotcha. All right. Sweet. Next up I have is money from a family member. Maybe they're helping out. Maybe they're not helping out. They just wanted to give you some money near closing. How would you go about documenting that?
Well, the first thing we're going to want is the relationship, because money for closing just can't come from any party. If they are a relative, we'll make sure it's an eligible source of funds. Okay. Yeah. And if it's an eligible gifter, we're going to get a gift letter. And on that gift letter, it's going to have things like, that it's not a loan, right? It can't be a loan. They can't borrow money from a family member to use as funds, but they can be gifted money. And on that gift letter, it's going to say this is a gift. It doesn't have to be repaid. And some other stipulations on there. Do you remember any of the ones on there?
Yeah. The biggest one is no repayment is required.
Right.
That statement that they're signing, like, hey, this does not need to be paid back. That's like the most important thing. But yeah, you're going to have some generic information like their name, relationship, the source of where the donors getting their money,
Right.
And then like basic contact info, things along those lines.
And then so not only the gift letter, if the funds have been deposited into the borrower's account, we're going to want to get either a copy of a canceled check, and if it was done by wire, we'll probably get a copy of the giftor's statement.
Yes.
And how else would it be deposited? Wire, check, cash is a problem.
Yeah, cash is a problem.
Cash is a problem. The other thing that they can do is send funds directly to closing, and that's preferred because it's the lowest amount of documentation needed.
Yeah, and in that case, it wouldn't be so much. It would just be more the gift, but not so much a large deposit.
We still get a gift letter.
Yeah, but it would still be a gift letter.
We'll still get the gift letter, and they can deposit. If it's deposited directly to the title company, then I don't think we need to get much at all from the giftor.
We're chilling.
We're chilling.
Cool. Next up, I have on the lines of gifts. Let's say you're getting married and you get wedding gifts. And
Right.
sometimes that can be a very large sum of money, and you're depositing that into your account. And maybe you're getting a house shortly after you're getting married. How would you go about documenting something like that?
Well, this is a little bit interesting. So they would get a letter of explanation from the borrower. They're going to get an underwriter would probably want to see actual marriage certificate to show when that date was, or if the wedding and the marriage were very far off, then maybe proof of wedding date and things like that.
Yeah.
So not maybe the marriage happened one date and the wedding was different. So the proof of wedding date, and then to tie those together with the cash that was typically deposited into the account to prove back that it was a gift from a wedding.
Right.
And that is actually an acceptable source of funds, I think.
Which is awesome.
Yeah.
Yeah.
But it has to make sense too.
Yeah, like, if you got $200K in wedding gift money, it
Might be questionable.
Yeah, it might be a little questionable.
Right.
Yeah. All right. Awesome. So the next one I have up is if you're selling your car. This comes up more than I expected. So people will sell their car and they use that money, obviously, contributing towards their house. How would you go about documenting that?
You're going to want to document bill of sale.
Okay.
However that money was transferred, if it was a check or a wire, and you're going to want to look at the values, maybe a Kelley Blue Book, to make sure it was ballparked. Because the reality is, like, there's lots of ways that, and I don't want to give people ideas, but there's lots of nefarious activity that can happen around any of these things. That's why the underwriters are going to do their due diligence to make sure it's legit.
Yeah.
So bill of sale, maybe the vehicle, when I say vehicle, not the car, but the means of which that money was transferred, if it was a wire or a check or things like that. And just to make sure it was a reasonable value.
Right, exactly. Yeah, I think the biggest thing is just kind of doing the research on, again, like if you get $200,000 for a
1984 Corolla.
Yeah, exactly.
Although that might be worth $200,000 now.
What's going on? Yeah, what's going on there? Yeah. But along the lines of selling stuff, I have heard some stories from our senior underwriters, and I was wondering if you had any stories on some interesting objects that people have tried to sell and prove that they have that money.
I have a couple of them come to mind, and this has happened to me. I had one gentleman who as assets, he put gold, okay? And we asked him to prove, that he had, I don't know, albeit, let's just make him number $50,000 in gold, okay? Yeah, I was expecting a certificate. I was expecting, a statement. I got it was a sheet of paper, a normal size sheet of paper with black rings on it. Oh. And I followed up with the gentleman. I said, what are these black rings? He goes, I photocopied a picture. I photocopied all of my gold coins. So he had like 6 or 8 pages of black circles. And I was like, all it is a black circle to me. He got very irate. Yeah. And if he's listening, I'm sorry this did happen. But he got very irate because I couldn't accept the black circles on a white piece of paper as his documentation of the gold coins. Yeah. That one was not easy to resolve, and I don't think we resolved it that way. I had another one. It was a dentist great guy, very nice guy, and I this was back in 2011 when the mortgage guidelines were super tight. I remember this very clearly because I will never forget this. He had to do around gold. I don't know what it is about gold and people doing wacky stuff, but he was a dentist. Yeah. He sent me a picture of his safe, and I called him. I go, "Why did you send me a picture of your safe?" He had almost like a gun safe, and it looked like in his closet. And he goes, "Well, zoom in." This was like in 2011, so I think the iPhone was on its like It was even, I think it was like the iPhone 3G had maybe just come out. So we're not talking about super high resolution stuff.
Something like that.
But he sent me a JPEG. So I was like, where do you want me to look? He's like, well, see right there on the shelf, there's a canister. I go, yeah. He goes, well, there's a bunch of teeth with gold fillings in there. I go, yeah. He goes, well, what I do is I wait till I have a bunch of these, and then I melted the gold, or I get the gold melted down and I sell it. I go, dude, this is a first for me. I don't know how I can document.
Yeah, that's crazy.
So we figure out other means, but I've gotten lots of, those are the two craziest that I've gotten probably. There's been on some of the ones I just really can't talk about on here.
Yeah.
But yeah, people, what we're trying to do is not make people's life difficult. We have to be able to prove that this happened and everything was above board.
Yeah.
Prove, not, I believe him when he says this is worth that.
For sure, yeah.
But I have to take that loan, package it up, and sell it to a quasi-governmental institution like Fannie Mae or Freddie Mac.
Yeah.
And they're going to make sure I dotted all my I's and crossed all my T's. And while I trust people, we have to verify it. So when we send it in, it doesn't get sent back to us with a repurchase request. In other words, I have to buy the loan back.
Yeah. No, that's super interesting. I could just imagine him like, yeah, this will do. This, I don't know, like 460p image of
it was terrible. It was tough, but he was obviously frustrated because we were asking for a lot of documentation. But the other thing about our industry is the more well put together you are, the more documentation you need. The more assets you have, the more houses you own, the more things. It does mean more documentation for the most part. We're more and more smart about it. This isn't 2010 where we had to over document everything.
Yeah.
But there's still a bunch of laws, guidelines, and regulations we have to adhere to.
All right, sweet. Well, thank you. I appreciate you sharing those fun stories. The next one I got for you is any type of bonus. Let's say like an end of year bonus where you get a large sum of your money, and it's much more than your typical pay stub, obviously. How would you go about documenting that?
That's honestly pretty easy. You would just get the pay stub showing that bonus. Or, if I'm sure there was some kind of pay stub. If not, we can do a full verification of income with your employer to document the bonus.
That's simple as that.
It's fairly easy as long as you have a decent a means of communication through your company.
Gotcha. All right. The next one I have is very new to the current environment that we are financially. Is crypto and virtual currency is on the rise and becoming more and more mainstream. How do you go about documenting, let's say, liquidation of your cryptocurrency into money, and you deposit that into your real bank account? Or I don't want to say real bank account, but you know what I mean. Yeah.
So, crypto is going to be we're going to see cryptocurrency, the Bitcoin, Ethereum, all these things. We're going to see that more and more and more as it becomes mainstream. And right now, I'll be honest, for the last couple of years, the lenders have been like, we can use it as long as you season it in your bank for 2 months, and we never see it go in there. I mean, loosely saying the guidelines. Yeah. And it's seasoned in there, and it's as good as cash after that amount. So they've come back, and now they've said virtual currency like Bitcoin or other coins can be used if we see a large deposit into your account. So it has to be into a U.S. federally chartered bank. Okay. Right? And if I make a mistake here, don't fry me. No. But so it has to be into a U.S. bank. Yeah. And we have to see that it went from account that they own into the bank. Now, where there's some unclear and grayness is, what do we do when we look at that crypto account and see large deposits going in there? That is some gray area right now because they don't address that in Fannie and Freddie's guidelines right now. And if I was to pull this up right now, we did earlier. Yeah. It leaves a big hole in that large deposits into that account, because I know personally from dealing with cryptocurrency. I mean, are we expected to go onto the blockchain and see the transactions in that account?
Exactly.
And if they're an avid trader, not saying we're counting the income from their trading, but if they're an avid trader, there might be a lot of churning in their account going, and it's going to be very difficult to tell. So this is new area. We don't have a clear picture of how the investors, those are the people that lenders sell loans to, whether it be Fannie Mae, Freddie Mac, or securitized to Ginnie Mae. We don't have an absolute clear picture of what they're going to want right now, as that is starting to become more mainstream and starting to unravel.
Yeah. Yeah.
But it is, again, if you can prove, right now the guideline says if you can prove that was your account, and you liquidated it into, and a bank account that technically we can use it.
Right. All right. Yeah. So a little bit of new territory there.
New territory.
And I'm sure it'll get more and more fleshed out as it becomes more.
Let's hope.
Let's hope.
Because we're going to see a lot of that.
Yeah.
No doubt.
As it becomes more mainstream. All right. The last one I have for you is just a bit of a fun one. Let's say, a month before closing, you go to Vegas and you somehow win big. And
Finally.
Yeah. Finally.
Yeah.
You get a $50K banger slot pool.
Right. Let's do crap table. Let's do
Crap
something
table,
more
sure, whatever you want.
It was a
Whatever
big roll. You were down, and
Yes.
then you and then you won big.
Yeah.
I don't know how that happened, but let's just pretend you won big. How much did you say? 50K.
Let's say 50K.
So $50,000. Now here's the this is documentable. Okay. So what happens is when you have $50,000 of chips, you take that. First of all, they're going to walk you very nicely up to the cashier when you're ready.
Yeah. Another caveat is you're cashing out after that.
Yeah,
Which may not be the case. But
Yeah,
let's say you're cashing out.
If you went up 50 grand, I would hope that you cashed out. But
yeah.
they don't build these multi-billion-dollar casinos because people are smart.
Yeah.
Right. People think they can keep winning big. But anyway, let's pretend you're smart and you walk up to the counter with 50K. You're going to be walked up to the counter with 50K in chips, or they'll probably give you a marker or something. But any event, at the counter, when you turn that into cash, they're going to give you what's called a W-2G. It's like a 1099. Because they're going to document anything over like $600, I think. They're going to document with the IRS.
Okay.
And so you're going to get a little ticket that proves your winnings. And so you take that cash out, you keep those receipts, you keep that W-2G. That's your documentation. You deposit that into a bank, you give the lender the W-2G and the check that they give you, or however they give you your money.
Right.
There's your documentation for
Easy.
that. Yeah.
Simple.
And we're not advising you go out to Vegas to win 50K right now.
Yeah, but if you do cash out,
give me a little something.
yeah.
Well, good. I hope this has been somewhat enlightening and entertaining for you today. If you have a question on any of these items, you can put them down below. And further down below in the description, there's means to reach out if you have any questions about any of these things. If we made a mistake, give us a little grace. Different lenders document things different ways. We're talking in generalities of what we've seen in the past. These could also change. So if you're watching this in 2024, it's probably accurate. If you're but things can change quickly. If you're watching it later down the line, it could the guidelines could change. So if you have any questions, comments, concerns, put them down below or reach out to us directly. That's all I got. Like, subscribe, share, and we'll see you next time.